This is Seth David for schoolofbookkeeping.com, bringing to you another special screencast. This time we're talking about how to sell your business on the numbers. How do you sell your business based on the numbers? This is the third lesson. In the first lesson, we took a quick look at what you're seeing on your screen now, which is what it means when we say I want, for example, $250,000 in exchange for a 20% stake in my company, and why that translates to a valuation of $1,250,000. In the second video, we took a look at this other schedule I did, which I emphasized, and I'll re-emphasize here, is just a very rough sketch of what a set of projections might look like at the summary level, such that we ultimately analyze this in terms of what will be the return on investment, or ROI, for the shark who invests in my company. Now I want to look at how do we sell this based on the numbers. And this is going to be a little subjective, and I got into a little bit in the previous video. Looking at a scenario like this, for example, this might look really good because this promises that they'll get their money back within a year. But keep in mind, as I pointed out in the last video, that what that means is I have to prove that I can actually hit these numbers. So in theory, and by the way, you enter the first month's numbers based on what you think your sales are in the current month. The dates work themselves out based on your computer's clock, so you don't have to worry about that. If we get into November, by the time you look at this, then this template will automatically start you off there in November. So the idea is you put your first month's sales in here, or your current month's sales, I should say, and then the projections will go from there. Now, you have to make sure this is realistic, which means that you have to be able to support and prove to a shark, and remember, these guys know their stuff, so you can't try and BS them. It has to be legit. But you want to go to them and prove these numbers out. Now, let's say that you look at this and say, you know what, it's way too aggressive. There's no way, that it's really going to happen at that rate. Maybe 5% monthly growth is too aggressive. So let's see what happens. We could change this to 5% effective annual by just dividing the 5% by 12. So let's say we wanted to make this 5% annually, or just again, we're doing a monthly steady growth rate. So let's say we wanted to make it so that it comes out to 5% a year. Then we need to divide the 5% by 12 here. So equals, open parentheses, 0.05 divided by 12 to get what the sort of monthly percentage will be. So 0.42%. So this may look much more realistic to you, but now we come down here and notice I've got this set up so that until they get 100% of their investment back, it's going to be red. Once they hit 100% and more, it's green. So it lets you see very clearly how long it's going to take them to get their investment back. So then the question is, can you sell this to them? Can you prove to them that these numbers are realistic? And let's say the answer is no. Let's say I don't think I can sell to them. I think they're going to want their investment back in a 12-month period. What that means is you have to go back to the valuation then, and you can do one of two things. Either you increase the stake that you give them, or you decrease the amount of the investment that you take in from them. Now, let's say you've already determined that you need $250,000. It may well be, and they're going to ask you these questions very likely on the show, that you already have it planned out exactly where this money needs to get spent, which is a good idea, by the way, going into it, is being prepared to explain that. And then you might have noticed they don't like hearing that you have debt. So don't go in there saying we need to raise money with you so we can pay off debt we've incurred with someone else. That's not a good strategy. So let's say you decide you need the $250,000. So then that leaves you with the choice of raising the stake. So let's see what happens when we increase it to 25%. Let's go back to our sales model. And so that means it's going to take a little more than a year. And maybe you feel comfortable going to the sharks and saying, look, I know these numbers are conservative, so I know if anything we're going to do at least as good as this says, if not better. And based on that, you're going to get your money back in a little more than 12 months. It's not a bad deal. In fact, in some industries, that might be considered extremely fast. Now, this is how you have to tweak this. The other thing is, this assumes, of course, that all your assumptions here are in place. Maybe your gross profit percentage needs to be increased or decreased. Maybe your percentage of gross profit as your general administrative expenses needs to be tweaked. The first step is make sure you're comfortable that these numbers are conservative and as accurate as could be as far as projections go. Then you can go around and play around with the valuations or what you're asking for in exchange for the stake you're asking for. Because notice what happened when I increased the stake to 25%, that lowers the valuation of my company to $1 million from $1,250,000. So this is how you sell on the numbers, is you play with the numbers to make sure that ultimately you appeal to them where it counts, right? In the pocketbook, you say, look, here's what you're going to realistically get back in terms of your return on investment. Now, you'll notice there's a bottom section here that initially pulls by formula. This again is just for fun. While you're watching the show, if you're following along with a company and you put the numbers in, you can come in here. Initially it's drawn by formula from what's above, but you can ultimately overwrite that with what they were awarded so that you can kind of compare. And down here you can choose from this drop down, and just again, just for fun, you can make notes and you can choose which shark actually did the deal with them. If it's a multi-shark deal, then just choose multi-shark deal. And that's about it, my friends. That's how you sell on the numbers. That's how I would try and sell the sharks on investing in my company or the company of a client of mine if I were asked to do this for them. As always, if you have any questions, email me, Seth@schoolofbookkeeping.com. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.